Hello, welcome to Management Accounting channel. I'm your tutor, Mr. Edson. Today we are going to discuss about the calculation of break-even point in units, and we are going to do so by attempting the question which will guide us on understanding the concept. Our question states that Midundo Kabambe, a manufacturing of electronic equipment, decided to analyze profitability of new portable compact disc CD player. On a CD player line, the company incurred shillings 2,520,000,000 of fixed cost per month while obtaining total revenue of shillings 6 billion from selling 20,000 units. The variable cost was shillings 120 per unit. Recently, a new machine used in production of CD player has become available. It is more efficient than the machine currently being used. The new machine would reduce company variable cost by 20%, but leasing it would increase the fixed cost by shillings 96 million per month. Required, compute the break-even point in units, assuming the use of all the machine. So we are going to attempt to compute the break-even point in units, assuming the use of old machine. Our question said that there was an old machine, but currently Mr. Mdundo is planning to buy a new machine, but our question does not ask us to deal with a new machine. It ask us to calculate break-even point in units, assuming the use of old machine. Let's go together to see how to calculate break-even point. Okay, first of all, break-even point is point either in units or revenue where total cost is equal to total revenue. In other words, profit is equal to 0. The formula for calculating break-even point in units is given by break-even point in units is given by the following formula: fixed cost over contribution per unit, and the contribution per unit is equal to price per unit minus variable cost per unit. So let's go to our question and look on this figure: fixed cost and the contribution per unit. Okay, in our question we have been given the following amount which was incurred on fixed cost. So our fixed cost on old machine is 2,520,000,000. In our question, fixed cost is equal to 252 52 billion, 2,520,000,000, and the price per unit, which will be used to calculate contribution per unit, is equal to, in our question we have been given that old machine by using old machine the company made 6 billion on sales by selling 20,000 units. So price per unit is calculated by taking the total revenue, dividing it by units, 20,000, we are getting 300,000 shillings per unit as a unit price. Variable cost per unit, variable cost per unit have been given as a question. Let's go and look for it. The question says that by using old machine, the company cut shilling 120 as variable cost per unit. So variable cost per unit have been given directly in our question. 120,000 shillings per unit. So using this figure, break-even point per unit is equal to fixed cost, which is equal to 2,520 million dividing by 300,000 unit price minus 120 variable cost per unit. Here we are calculating contribution. So taking fixed cost over contribution, which is 180, we get 14,000 units. So our break-even point in units is 14,000 units. So this is how you calculate break-even point in units by using the formula which we have discussed here. So this is the formula which you are supposed to use to calculate the break-even point in units, and we have done or illustrated that by using this example here. So until next time, thank you for watching. Don't forget to subscribe, and don't hesitate to ask any question in comment below or by using my email, which is amidugedson@gmail.com. Please send your question in this email, or if the question is short enough, use the comment section below, and I will be glad to answer it for you. Thank you very much. Until next time, thank you.